This time speaking to you as investors, specifically if you have an eye for cryptocurrencies. You might recall that a few weeks ago we alluded to the fact that the South African Revenue Service, or SARS, is actually going to audit and follow up on South African investors and taxpayers who have an interest or a stake in cryptocurrencies that might have accumulated in value. As a result, a capital gain has been benefited or even withdrawn from their holdings in cryptocurrencies used specifically for investment purposes. To tell us more about this and perhaps provide us with an update in terms of the developments, what processes will take place and how it impacts us as listeners, we're joined on the line by Thomas Lobban, who's a legal manager for cross-border taxation at Tax Consulting SA. Thomas, welcome to KayaBiz.
Thank you for having me. Good to be here.
Excited to speak to you, and we hope that the lights are on where you are, but we can hear you loud and clearly. So hopefully that won't impact on the network. But SARS is really taking its positioning against cryptocurrencies quite clearly. Perhaps give us a refresher and a reminder in terms of how SARS looks to tackle taxation on cryptocurrencies.
Well, the fact of the matter is that crypto has always been taxable. Only recently SARS picked up its project in really closing this gap in revenue collection. The reality of the situation is that crypto has always been taxable. And it's not just when you withdraw your cryptocurrency from whatever platform you hold it on, and it's not just when you sell it for money itself, nor is it just subject to capital gains tax. If you're somebody who's regularly or frequently trading in cryptocurrency, you will be taxed as a trader, with cryptocurrency being your trading stock. So now SARS is looking at finding new ways to find this information out from taxpayers and will be punishing those who they find non-compliant foreseeably.
The following up really does speak to auditing processes that will be followed, and of course even keeping us accountable as cryptocurrency holders. How is this process expected to work, and how should we as taxpayers actually prepare for this process?
Well, at the outset, what SARS has embarked on is a project of audit letters, submitting these requests for information to taxpayers directly. And you would think that they're relying on the honesty of a taxpayer to honestly disclose this to SARS when they ask whether you have held cryptocurrency, the purpose for which you've traded it. But the fact of the matter is that where SARS sees that you are non-compliant, where they go through your bank statements or through the 3 billion rand new budget allocation, they find new mechanisms to find you out. You could be subject to a fine or up to 5 years imprisonment in some instances. So it's really the penalties that are guiding the principle here more than anything.
That's quite substantial, 5 years?
Indeed. There are different tranches of the tax offence. Certain offences on the face of it will land you a fine or imprisonment for up to 2 years. But where you're seen as attempting to evade tax or obtain an undue refund, which is implicitly the case where you leave cryptocurrency income off your return, for example, it's no stretch of the imagination to see that SARS would gun for the highest possible penalty.
Makes sense, specifically if it does allude to the evasion of tax, which we know is illegal, versus avoiding tax, which is using the processes and principles of tax to pay lesser fees, perhaps. But Thomas, I'm also keen to understand, for many South Africans, they've used Bitcoin as an asset class to invest in, some as a trading tool and opportunity. But you've also alluded to some people who just hold a Bitcoin, and you would need to disclose this fact. What happens in the case of any kind of capital accumulation or continual dividend withdrawals of Bitcoin, if I can refer to it as dividends? I guess what I'm trying to understand is how will this be taxed according to the rules and regulations we have?
Absolutely. The rules around whether an amount is seen as a revenue amount or capital in nature is a grey area in many instances, predominantly based around the intention of the taxpayer. Now, if you are seen to be holding cryptocurrency on a longer term basis, simply as a passive investment, or you're one of those individuals who has staked their cryptocurrency and in return you get reward tokens of cryptocurrency, almost like interest or dividends, as you say, then when you ultimately sell that cryptocurrency, that could be seen as capital in nature, similar to when you sell your house or any capital asset or a share that you've held for 3 years. For example, subject to a lower tax rate, effective maximum of 18%. But the onus always falls on the taxpayer to ensure that they are able to prove the tax position that they've taken. And in many cases, cryptocurrency investors fall short on the mark when they need to bring up this substantiating evidence, this documentation, such as reports from a cryptocurrency platform.
It's going to be quite an interesting ride, and I'm assuming that there aren't any timeframes as to when this will be implemented by. If so, which particular tax year is this likely going to apply to?
It's more or less a pie in the sky statement to make, but I would say that SARS is looking at the 2021 year of assessment mostly and moving forward from there. That's not to say that SARS can't catch you out on any historic compliance, non-compliance. They're not restricted in that regard. But we do have the commissioner stating that there is a new team being put together at SARS, and they are looking into high net worth individuals, and especially those who have invested in cryptocurrency. And they'll be sending the first of those letters out within the second half of April.
So the best positioning for any taxpayer who does hold Bitcoin, I guess, is to disclose.
Absolutely. And if possible, get advice on the matter. You have many individuals who take the wrong position out of ignorance, or an advisor who's not perhaps as adept as they should be. So really making sure that you have somebody who understands the intricacies of cryptocurrency, as well as tax and the practicalities of dealing with SARS, is the magic formula that you're looking for as a guiding hand.
Thank you so much for that, Thomas. Really does help in terms of understanding the dynamics, the lay of the landscape, and making sure that we avoid imprisonment and fines, right? By being tax compliant citizens who abide by the law. And as the finance minister often says, surrender to Caesar what belongs to Caesar, right? In terms of paying our taxes. Thank you so much, Thomas, for your time this evening. That's the legal manager for cross-border taxation at Tax Consulting SA, Thomas Lobban. Afropolitans, if you hold Bitcoin, you've heard it yourself. Be warned, it is an asset class that you can be taxed on the same way that you can be taxed on your rental income or on dividend income that you receive from your shares. But the secret is to disclose. Rather that and then manage the situation from there than trying to hide and evade these taxes, as you could face significant fines and penalties, including 5 years, up to 5 years of imprisonment.